The year 2025 began with whispers of a crypto spring. Bitcoin, the bellwether of the digital asset world, hovered above key support levels. Optimism filled the air. However, February brought a harsh reality check. Bitcoin tumbled. The slide triggered a wave of selling across the cryptocurrency market. Is this just another dip, or are we staring down the barrel of a full-fledged bear market? The question is on everyone's mind. Seasoned traders have seen this before. Remember 2018? Bitcoin lost over 80% of its value. The scars of that bear market still linger. The current decline is not as severe yet, but the parallels are undeniable. Bitcoin has breached crucial support levels, signaling further downside risk. The charts are flashing warning signs. This isn't just about numbers on a screen. Real people are feeling the pain. Retail investors, lured by the promise of quick riches, are seeing their portfolios shrink. Panic is setting in. The fear is palpable. Is this the end of the Bitcoin dream, or is this just another bump on the road to mainstream adoption? One thing is for sure, the crypto market is in for a wild ride. Technical analysis. It's like reading tea leaves, but with candlestick charts and moving averages, and right now the technical indicators are painting a grim picture for Bitcoin. The 107-day weekly support band, a closely watched technical indicator, has been breached. This is significant. This band acted as a strong support level during the 2024 bull run. Breaking below it suggests that the bears are in control. The relative strength index, another key indicator, is flashing red. The RSI measures the magnitude of recent price changes to evaluate overbought or oversold conditions. It's currently deep in oversold territory. This signals that the selling pressure is relentless. The bears are in the driver's seat. Where's the bottom? It's hard to say, but technical analysis suggests that Bitcoin could be headed for a significant correction. Buckle up, folks. It's going to be a bumpy ride. The mood in the crypto market is about as cheery as a funeral parlor. Fear and uncertainty reign supreme. Social media is abuzz with tales of woe. Retail investors, once giddy with dreams of Lambos and moon landings, are now staring at their screens in disbelief. The buy the dip mantra has been replaced by a collective groan. Capitulation is in the air. Capitulation is that moment of despair when investors throw in the towel. They sell their holdings at any price just to escape the pain. It's a bloodbath. And it often marks the bottom of a market cycle. We're seeing signs of capitulation now. Long-term holders, those who weathered previous storms, are starting to crack. They're selling their Bitcoin at a loss. Even the influencers, those perma-bulls who shill every shitcoin under the sun, are starting to sing a different tune. They're deleting their Bitcoin to $1 million tweets. They're talking about portfolio diversification and risk management. Translation, they're scared shitless. When the influencers start heading for the hills, you know it's time to batten down the hatches. The crypto storm is upon us. It's not just the technicals and the sentiment that's dragging Bitcoin down. The macro environment is a dumpster fire right now. Inflation is still raging despite the best efforts of central bankers to put the genie back in the bottle. Interest rates are rising. Global growth is slowing. And geopolitical tensions are escalating faster than a Twitter war between Elon Musk and a sentient AI chatbot. In short, it's a perfect storm for risk assets like Bitcoin. When the economy is uncertain, investors flee to safety. They dump their risky assets, like crypto, and pile into safe havens, like gold and government bonds. This flight to safety is putting downward pressure on Bitcoin's price. The war in Ukraine has also added fuel to the fire. The conflict has disrupted global supply chains, fueled inflation, and created a climate of fear and uncertainty. This is not good for Bitcoin. To make matters worse, the US Federal Reserve is expected to continue raising interest rates this year. This will further strengthen the US dollar, making Bitcoin less attractive to foreign investors. The macro outlook is bleak, and until the global economy stabilizes, it's unlikely that Bitcoin will stage a sustained recovery. Section 5. Altcoins reeling. A sea of red engulfs the market. If you thought Bitcoin was having a rough time, spare a thought for the altcoin market. It's a bloodbath out there. Altcoins, those smaller cryptocurrencies that promise to be the next Bitcoin, are getting crushed. Many are down 50%, 70%, even 90% from their all-time highs. It's a sea of red as far as the eye can see. The meme coin craze, which gripped the market in 2024, has come to a screeching halt. Dogecoin, Shiba Inu, and all their furry friends are down bad. Remember those to the moon tweets? Yeah, about that. The DeFi, or decentralized finance sector, once hailed as the future of finance, is also in turmoil. Several DeFi protocols have collapsed, wiping out millions of dollars in investor funds. The problem is that many altcoins are built on hype and speculation rather than solid fundamentals. They lack real-world use cases, and they're often controlled by anonymous developers who are accountable to no one. When the market turns south, as it inevitably does, these altcoins are the first to get crushed. It's a harsh lesson in the importance of due diligence. Not all that glitters is gold, and in the world of crypto, not every altcoin is the next Bitcoin. Section 6. Ethereum and Solana, navigating the storm. It's not just the small-cap altcoins that are feeling the heat. Even the industry heavyweights, Ethereum and Solana, are struggling to stay afloat in this crypto tempest. Ethereum, the second largest cryptocurrency by market capitalization, has lost a significant chunk of its value since the start of the year. The much-anticipated merge to a proof-of-stake consensus mechanism, which took place in 2022, hasn't done much to boost its price. Solana, once dubbed the Ethereum killer, has fared even worse. Its price has plummeted, wiping out billions of dollars in market value. The network has been plagued by outages and technical issues, raising concerns about its scalability and reliability. These setbacks have tarnished Solana's reputation and eroded investor confidence. Both Ethereum and Solana are facing stiff competition from a new breed of Layer 1 blockchains such as Cardano, Avalanche, and Polkadot. These newer blockchains offer faster transaction speeds, lower fees, and a growing ecosystem of decentralized applications. The battle for dominance in the smart contract platform space is heating up, and in a bear market, only the strongest will survive. Section 7. Beyond the charts, regulatory scrutiny, and market players. While the charts paint a bleak picture, there are other factors at play that are adding to the uncertainty in the crypto market. Regulators around the world are finally starting to take notice of the Wild West that is crypto. And they're not happy about what they see. The SEC, the US Securities and Exchange Commission, has been particularly active in recent months. They've launched investigations into several major crypto exchanges, including Coinbase and Binance, over allegations of insider trading, market manipulation, and the sale of unregistered securities. These investigations have cast a long shadow over the industry. They've created a climate of fear and uncertainty, and they've made it more difficult for crypto businesses to operate in the US. Meanwhile, traditional finance giants like Citadel Securities and Virtue Financial are muscling their way into the crypto market. These firms are known for their high-frequency trading algorithms and their deep pockets. Their entry into the market could bring much-needed liquidity and stability, but it could also stifle innovation and concentrate power in the hands of a few large players. The future of crypto is being shaped by forces both inside and outside the industry, and it's still too early to say who the winners and losers will be. Section 8. Weathering the storm strategies for a bear market. So what's a crypto investor to do in these turbulent times? First, don't panic. Bear markets are a natural part of the market cycle. They're a time to reflect and position yourself for the next bull run. Here are a few tips for weathering the storm. 1. Don't catch a falling knife. 2. Focus on Bitcoin. It's the most established and liquid cryptocurrency. 3. Diversify your portfolio. Don't put all your eggs in one basket. 4. Dollar cost average. Invest a fixed amount regularly. 5. HODL. Hold on for dear life. Remember, bear markets don't last forever. The crypto market has a history of bouncing back stronger. Section 9. The future of Bitcoin, a roller coaster ride, continues. The recent crash in the crypto market has left many investors reeling. But it's important to remember that volatility is par for the course in this nascent asset class. Bitcoin, in its relatively short lifespan, has already experienced multiple boom and bust cycles. Each downturn has been followed by a new all-time high. The fundamental value proposition of Bitcoin, as a decentralized, censorship-resistant store of value, remains intact. In fact, the current macroeconomic environment, characterized by inflation, geopolitical uncertainty, and a growing distrust in central banks, could make Bitcoin even more appealing to investors seeking an alternative to the traditional financial system. The road ahead for Bitcoin is likely to be bumpy. Regulation, competition from other cryptocurrencies, and the inherent volatility of the market will continue to pose challenges. However, for those who believe in the long-term potential of Bitcoin, the current downturn may present an opportunity to accumulate this digital gold at a discount. The roller coaster ride of Bitcoin continues. Hold on tight.